Hey, what's up, everybody? Ralph here. So, according to a lot of experts, we are in a recession, right? And for those of you that don't know what a recession is 2 consecutive quarters of negative GDP. But if you listen to places like the White House, where they're trying to say that we're not in a recession, where they're trying to redefine what a recession is, it would make sense that we're probably not in a recession. And they say it's because of like different factors that entail, that cause a recession. And that's kind of true. There's different, variables that, that make up a recession. But based on the definition, a recession is two consecutive quarters of negative GDP. And when the numbers come out on Thursday, the official numbers come out on Thursday, then which most people expect that it's going to be another quarter of negative growth, which would technically put us in a recession. So because of this, obviously because of recession or this looming recession, you have a lot of companies or a lot of people tend to scale back, or people tend to change their spending habits, and people tend to focus on things that they need as opposed to the things that they want. And companies like Walmart are feeling the effects of this, right? So Walmart obviously is one of those consumer staples where during times of recessions or where there's economic troubles, people tend to go to because they have more affordable prices. Okay, so based on this article on CNBC. They say Walmart on Monday cut its quarterly and full-year profit guidance, saying inflation is causing shoppers to spend more on necessities such as food and less on items like clothing and electronics. That shift in spending has left more items on store shelves and warehouses, forcing the big box retailer to aggressively mark down items that customers don't want. The company's stock fell in after-hours trading following the announcement. Shares of other retailers, including Target and e-commerce giants Amazon, also fell. Walmart said it now anticipates adjusting earnings per share for the second quarter and full year to decline around 8 to 9% and 11 to 13% respectively. It had previously expected them to be flat up to slightly for the second quarter and to drop by about 1% for the full year. So if you compare this to other stocks like tech stocks, which a lot, depending on which one you choose, they fell by like 20%, over 20% in the stock market. Places like Walmart, Target, Amazon, Amazon you can consider it a tech stock, but like Walmart and Target, they obviously don't get the full impact as other tech stocks, because people tend, during times of recessions, people tend to go to places like Walmart and Target because they're more affordable price, and they tend to be able to get the things that they need instead of shopping at Amazon or other places where you tend to get things that you want. But obviously when it comes to Walmart, these places like consumer staples where people go and make sure they can get affordable price, and they start to focus on the things that they need instead of the things that they want. And you can see that they're, obviously declined 8 to 9%, which is bad. But at least if you compare it to other tech stocks, it's not as bad as those tech stocks. So inflation has grown at the fastest pace in 4 decades. As consumers face higher prices at the gas pump, grocery store, and restaurants, some consumers are choosing where to spend money and where to pull back. In some cases, they are prioritizing experiences they missed during the pandemic, such as splurging on vacation or dinner at a restaurant. I'm not sure I would do that, but to each their own. So Walmart, which is the biggest grocer in the U.S. and often considered a bellwether for the overall economy, said more customers are turning to its stores, which is known for lower prices, to fill their pantries and fridges, but they are skipping over general merchandise that they can live without. And obviously that makes sense. Like, you don't need electronics, you don't need all those items that just for entertainment. You need to focus on things like food, medicine. These are things that you actually need that's going to help you get through tough economic times. So it makes sense that people want to focus on food and things that they need that's going to help them get through these tough times. So Walmart said it now expects same-store sales in the U.S. to rise about 6% in the second quarter, excluding fuel, as customers buy more food at its stores. That's higher than 4 to 5% increase that the company previously expected. However, the merchandise mix will weigh on the company. Groceries have lower profit margins than discretionary items such as TVs and clothing. And that's the thing, and that's where you see a lot of, and that's where you see Walmart, obviously, their shares are falling, because when it comes to groceries, things that people need to buy during these times, they have a lower profit margin compared to, things like items like TV and clothing, where that's where you make a good profit margins within these companies. So, but obviously during times, people are going to change their spending habits and focus on the things that they need, like food, which tend to have a lower profit margin for these companies. So the increasing levels of food and fuel inflation affecting how customers spend. And while we've made good progress clearing hardline categories, apparel in Walmart U.S. is requiring more markdown dollars, CEO Doug McMillon said. He said that the company is seeing strong back-to-school sales in the U.S., but anticipates people will pull back on buying general merchandise in the second half of the year. That could be a warning sign for retailers ahead of the holiday shopping season. The sharp change in consumer spending could jeopardize other aspects of Walmart's strategy too. The company wants to grow its subscription service, Walmart Plus. So they're even starting a Walmart Plus. So you see a lot of companies doing a Disney Plus. You see a lot of companies starting these Plus subscription services. So we'll see how that goes. I'm not sure what that would entail or how that worked, but I mean, I'm sure it's some type of app where you can. I'm not sure what they would offer on that, but let's see what they say. But that could be a tougher sell if Americans scour their bills for fees to cut. It has launched a growing number of general merchandise brands, particularly in apparel and home, which can now wind up on the clearance rack. Because exactly, like they said, like right now, people are not going to be focused on Walmart Plus. They're going to be like, we're focused on food and things to survive this recession. So that this Walmart Plus probably is a bad time to roll it out. But I guess we'll see how that works. Maybe they'll scale it back or they'll hold up on bringing it out. So yet McMillan has said Walmart can gain market share and more of customers' wallets during the inflationary period by emphasizing good value. Over the past several quarters, he stressed that the discounters will keep prices low. Target also slashed its forecast for the second quarter. Last month, the retailer said its profit margin would take a hit as it canceled orders and marked down merchandise. The company largely attributed the revised forecast to having too much merchandise, including a lot of bulky items such as small home appliances that saw a drop in demand. So, and that's what happens when they what it is if demand drops, it's economics, right? Supply and demand. If demand drops for certain items, they're going to drop down the prices, right? And that's what you see with these merchandise, these electronics, TVs, clothing. There's low demand, so therefore, obviously they're focusing on other things like food. There's high demand for that, so you're gonna see high prices when it comes to the food. But when it comes to the merchandise, where there's low demand, the prices are going to drop for that. And as you can see, that's where a lot of their profit margins are suffering with Walmart and Target. All right, so shares of Walmart fell over 9% after hours. Target was down more than 6%. Amazon fell more than 3%. Macy's, Kohl's, Nordstrom each slipped more than 3% after hours as investors look to get out of stocks that sell primarily apparel and home goods. Gap dropped around 2%. So you can see that they're trying to get out of companies that sell a lot of goods like apparel, like clothing, because obviously people are not focused on buying clothing. People are focused on buying food, which is the most important thing right now during a recession. Okay, so people are going to focus more on that. So obviously you can see that shares fell for companies that are focused more on apparel, like you said, Gap around 2%. So that's that, and that's what happens. Like when you go through times like this, people start to shift their spending habits. People start to focus on things that they need instead of the things that they want. And really, because obviously people are preparing for a recession, and then for a lot of people, even if the White House doesn't want to acknowledge it, people feel it in their pockets. Like they said, the grocery store, the gas stations. Right? People are feeling that they're paying more when it comes to housing. People are paying more today than they did a year ago. So regardless of whether the White House wants to acknowledge that we're in a recession, people feel it every day. Right? Every time you go, pump some gas, it's more expensive today. So regardless of whether they want to acknowledge it, people are feeling it, and they could change the definition all they want. People don't really care what the definition is. They understand that right now they're spending more money today than they did yesterday, and that's all that matters in reality. All right. So that's all I got for you guys today. If you got any comments or questions, make sure to leave a comment down below, hit the like button, share, and please do not forget to subscribe. All right. So you guys take care and have a good one. Later.